Anthropic just became worth $235 billion more than OpenAI. The company founded by ex-OpenAI staff specifically to warn about AI danger is now the most valuable AI lab on Earth. After a confidential IPO filing revealed a $965 billion valuation, the entire AI hierarchy just flipped overnight. 2 years ago, Anthropic was a cautious upstart with a fraction of OpenAI's resources. Today, it's crushing the company that invented ChatGPT. And both are now sprinting toward public markets in what's shaping up to be the most consequential tech IPO race since Google and Facebook. The question keeping Wall Street up at night can either justify these numbers. This isn't just about two companies. This is about whether the AI gold rush is real or the biggest bubble since the dot-com crash. And the company betting hardest on safety just became the one investors trust most with their money. Let that sink in. Here's what happened. Anthropic confidentially submitted a draft IPO registration after closing a $65 billion Series H funding round. That round valued the company at $5 billion. OpenAI's last private valuation, set during its own mega round earlier this year, landed at $70 billion. The gap is $235 billion. That's more than the entire market cap of Netflix. Anthropic didn't just edge past OpenAI, it blew past it, and the timing is nuclear. OpenAI is also preparing a confidential IPO filing with Goldman Sachs and Morgan Stanley, targeting September 2026 at the earliest. So, both labs are racing to public markets at the exact same time. Both are burning cash at unprecedented rates. Anthropic reportedly spent $2.7 billion on compute in 2024 alone. Both need to prove to public investors that AI isn't just hype, but only one is winning the valuation war right now. Rewind to 22. Anthropic was the scrappy safety-first alternative, founded by Dario and Daniela Amodei after they left OpenAI over concerns about the company's direction. Back then, OpenAI had ChatGPT, mainstream dominance, dominance, and a partnership with Microsoft worth billions. Anthropic had Claude and a reputation for being the responsible choice. Fast forward to today. Claude 3.5. Sonnet is considered by many developers to be the best coding model available. Anthropic's enterprise contracts are growing faster than OpenAI's. And the safety-first messaging that once seemed like a handicap is now a selling point for risk-averse corporations and governments. But here's what nobody is talking about. Anthropic's valuation leap isn't just about better technology, it's about investor fear. When you're a pension fund or sovereign wealth fund deciding where to park billions, you're not just betting on performance. You're betting on which lab won't accidentally create a PR nightmare or regulatory disaster that craters your investment overnight. Anthropic's entire brand is, "We won't do that." And in 25, with AI regulation accelerating in the EU, US, and China, that brand is worth $235 billion more than OpenAI's move fast and break things reputation. The market has spoken. Caution is the new disruptive. Let's compare the numbers directly, because the gap is staggering. Anthropic's current valuation sits at $965 billion after its Series H. OpenAI's last private round valued it at $30 billion. Anthropic's flagship model is Claude 3.5 Sonnet. OpenAI's is GPT-4 Turbo, with GPT-5 rumored but not released. Anthropic filed for IPO confidentially in Q1 25 and is targeting a late 2026 or early 2027 public debut. OpenAI is working with Goldman and Morgan Stanley for a September 2026 target at the earliest. Both companies are bleeding cash. Anthropic's $2.7 billion compute spend in 24 was a 40% increase year over year. OpenAI's spending is estimated even higher, though the company doesn't disclose exact figures. Neither is profitable. Both are betting that scale and dominance will eventually translate to sustainable revenue. But the valuation delta reveals something critical. Anthropic raised its Series H at a significantly higher multiple than OpenAI's last round. That means investors believe Anthropic's revenue trajectory is steeper, its risks are lower, or both. The most likely explanation, both. Anthropic's enterprise revenue reportedly grew 300% in 2024, driven by contracts with banks, healthcare companies, and government agencies. These are sectors that care deeply about auditability, safety, and regulatory compliance, areas where Claude's architecture and Anthropic's transparency give it an edge. OpenAI still dominates consumer AI with ChatGPT, which has over 200 million weekly active users. But consumer AI monetization is hard. Enterprise contracts are where the reliable revenue lives, and Anthropic is eating OpenAI's lunch in that space. And then it got worse for OpenAI. In January 2025, three of OpenAI's largest enterprise clients, none publicly named, but rumored to include a top 5 bank and a federal agency, quietly switched to Claude. The reason cited in leaked memos: confidence in long-term alignment and governance. Translation: they don't trust OpenAI's leadership not to do something reckless. And when you're a bank or a government, trust is the only currency that matters. So, why did Anthropic pull ahead now, and not a year ago? 3 reasons, and they all hit at once. First, the AI regulation hammer finally dropped. The EU's AI Act went into full effect in 2024. The US Senate passed the Safe AI Act in early 2025, requiring audits and red teaming for any model above a certain capability threshold. China updated its generative AI measures to include jail time for developers of harmful systems. Suddenly, Anthropic's obsession with constitutional AI and interpretability research wasn't just good PR, it was a regulatory moat. Companies that built compliance infrastructure early are now worth more because everyone else has to scramble to catch up. Second, the AI arms race hit a plateau. GPT-4 came out in March 23. It's now 25, and GPT-5 still isn't here. Claude 3.5 Sonnet, released in mid-24, is competitive or superior on many benchmarks. The gap between frontier labs is narrower than it's ever been. When you can't win on pure capability anymore, you win on trust, cost, and ecosystem. Anthropic has been building those advantages quietly, while OpenAI was focused on AGI timelines and existential moonshots. Third, investor sentiment shifted. In 23, the narrative was, AI will change everything, fund the boldest vision. In 25, after 2 years of jaw-dropping spending and modest revenue, the narrative is AI will change everything, but show me a path to profitability. Anthropic's pitch is simpler. Claude is cheaper to run than GPT-4. The company has fewer flashy distractions like Sora or DALL-E. It's focused on text models and enterprise use cases that generate actual revenue. That discipline is worth a $235 billion premium right now. But here's the contrarian take nobody is saying out loud. Anthropic's valuation might be inflated precisely because it's the safe choice. When markets are uncertain, investors pile into whatever feels least risky, even if the fundamentals don't justify it. Anthropic could be the AI equivalent of buying bonds during a stock market crash. It feels smart, but you might be overpaying for safety. If GPT-5 drops next month, and it's a generational leap, this entire valuation story could reverse overnight. Anthropic is winning the race today, but the finish line is still years away. So, where does this go? Both companies are preparing for IPOs in a market that hasn't seen a tech offering this big since Uber in 2019. And the stakes are higher than any IPO in history. If Anthropic and OpenAI go public and succeed, they'll unlock a flood of AI capital that could fund 1,000 more startups. If they go public and crater, the entire AI investment thesis collapses. Wall Street analysts are split. One camp argues these valuations are justified because AI is the next internet, a once-in-a-generation platform shift that will eventually dominate every industry. The other camp points out that neither company is profitable, both burn billions annually, and there's no clear path to margins that justify trillion-dollar valuations. The bear case is ugly. If Anthropic IPOs at $965 billion and the public market reprices it down to $400 billion on debut, it would trigger a cascade of down rounds across every AI startup. Venture funds would take massive losses, LPs would pull back, the AI boom would end overnight. The bull case is wilder. If Anthropic proves it can turn enterprise contracts into recurring revenue at scale, and if AI adoption accelerates as predicted, a $1 trillion valuation might look cheap in 3 years. The market cap of all AI companies combined could hit $10 trillion by 2030. In that scenario, Anthropic and OpenAI aren't overvalued, they're early. Experts are placing bets on both sides. Cathie Wood, CEO of ARK Invest, recently said AI valuations are conservative given the potential. Michael Burry, the investor who predicted the 2008 crash, called AI the most obvious bubble since tulips. Both can't be right. Here's what we know for sure. The IPO race between Anthropic and OpenAI is going to force both companies to disclose financials publicly for the first time. We'll finally see real revenue numbers, real losses, and real growth rates. No more rumors, no more leaks. Just audited numbers that either justify the hype or expose it. And the company that discloses first has a massive advantage. If Anthropic's S1 filing drops before OpenAI's, it sets the narrative. Investors will compare OpenAI's numbers to Anthropic's benchmark. If OpenAI files first, the dynamic flips. Both companies know this, which is why both are racing to file confidentially before the other goes public. There's also a geopolitical layer. The US government is watching these IPOs closely because AI dominance is now a matter of national security. If Anthropic or OpenAI IPOs and foreign investors pile in, there will be regulatory scrutiny. If China's DeepSeek or another foreign lab overtakes both before they go public, it becomes a political crisis. The Pentagon has already signed contracts with both labs for national security applications. The State Department has flagged AI as a strategic priority. These aren't just companies anymore, they're infrastructure, and infrastructure doesn't get to fail quietly. So, what happens next depends on 3 things. First, does either lab release a breakthrough model before IPO that changes the valuation calculus? Second, do public market investors buy the growth story, or do they price in caution and risk? Third, does regulation tighten fast enough to hurt one lab more than the other? My prediction, Anthropic goes public first, in late 26. The IPO prices at a slight discount to the $965 billion private valuation, call it $850 billion to leave room for a pop. The stock jumps 20% on day one, validating the AI thesis and setting the stage for OpenAI's IPO 3 months later. OpenAI prices at $700 billion, slightly below its private valuation, and also pops. But 6 months after both IPOs, reality sets in. Revenue growth slows, compute costs stay high, margins stay thin. Both stocks drift down 30–40% from their peaks. And the AI hype cycle enters its next phase, the trough of disillusionment. But the companies survive, keep building, and eventually grow into their valuations by 2030. That's the most likely scenario, but the range of outcomes is wild. This could be the start of the biggest wealth creation event in history, or the biggest wealth destruction event since 2008. We're about to find out which. Here's the bottom line. The company founded to be the cautious alternative to OpenAI just became the most valuable AI lab on Earth. That tells you everything about where we are in the AI cycle. The market is rewarding safety, governance, and enterprise focus over moonshots and consumer hype. But valuations this high come with a price. Anthropic now has to prove it can generate returns that justify $965 billion. OpenAI has to prove it can catch up. And both have to do it in public, under the scrutiny of shareholders who don't care about AGI timelines. They care about quarterly earnings. The AI boom is entering its most critical phase. The private market party is over. The public market reckoning is coming. And the 2 labs leading the race are about to find out if the world's biggest bet on artificial intelligence was visionary or delusional. If this keeps you up at night, subscribe. We cover this every week. If you found this useful, don't forget to hit the hype button. It helps the channel grow.